Hello and welcome to another update video about the DXY. The DXY continued to push higher this week after it reacted to this support zone around the, when was the low? On the 11th of March. And it still pushes high. It hasn't taken out the last swing high, but I think it's on a good, it's on a journey to doing so. So I think we still have a chance to fulfill this immediate breakdown scenario. But certainly with price action as it is right now, there is really only one chance left, I think, for this downside scenario to play out. And that's been my working thesis for a while. However, if the market continues to push higher, I will have to adjust. And I will introduce today also an alternative, more bullish scenario before a top is seen. It wouldn't really change the scenario as such, but it would delay this sell-off. So let's first talk about where we come from, my current scenario, which definitely is getting challenged. So it's getting less likely as we speak. Makes sense then when we see that parameters are not as respected as they should be to think about alternatives. But let's talk about where we come from first. So the idea is, in this scenario here that I have on the chart, that from this September 22 high, in a move to the downside, we had an A wave low, then a B wave rally. That was a flat structure, a so-called expanded flat in wave B. And the idea would be that in a C wave to the downside, we would head towards the low $90 region in a wave 1, wave 2, wave 3, 4, 5. Obviously, the idea that the wave 2 already topped is probably not, let's say, not the correct one, okay? But already last time, and I think a couple of videos ago, I already introduced the idea that, okay, the move down looks like a 3-wave move. So if it's going to, let's say, invalidate this immediate downside scenario, then it's likely going to do it from the orange support zone. And it did jump from there and is now rallying, but we can still look at an extended wave 2. So basically wave 1 to the downside and then A wave up, B wave down. So it respected the support zone, rallies at the moment. And it's probably going to move up a little bit further if this microstructure is correct. Because in a C wave to the upside, I mean, we're looking for the 100% extension level in the C wave. So we take the length of the A wave, we go to the low of the B wave, and then a target for wave C would be $106.74. That's really the level it shouldn't go above. Okay, so we have next resistances at 100, round about 105, then 105.87 and 106.74. Anything above that will invalidate this scenario pretty much, yeah. And the formal invalidation point is the October high, $807.37. It's the formal invalidation point. So we need to be prepared for what would happen if, right? So in the white count, yeah, I mean, it's likely that it goes and stretches a little higher. But if we don't see a 5-wave move to the downside that would break below that 8th of March low, it's likely going to, yeah, reset this B wave. So let's talk about now the, let's say, short-term bullish count. The short-term bearish one is discussed, but even in the short-term bearish one, it appears likely that we will see the price stretch a little higher in wave C of 2. But yeah, in an alternative perspective, I would have to assume that this B wave, which presumably topped in October, actually never really topped. Oops, 1 second. So this would be the B wave, yeah? Which would be a reset. And I'll highlight that maybe in yellow. So if wave B is still unfolding, then the count would just be slightly different. Basically, this entire corrective structure is just extending a little bit. Yeah? It's just extending a little bit, and I would have to assume that, let me just change that. Yeah, I mean, the idea would be that, yep, A wave down, okay. And then, however, the B wave never finished. Instead, this here is an A, B, and we're now moving up in wave C of B. That would reintroduce the, let's say, the old resistance area that we already used here to determine the top of wave B. which wasn't very aggressive, that B wave. So we can put that onto the chart again. Yeah, and this would be the standard resistance area for wave B, for a reset in wave B. It's just an area to watch, and it's currently defined between $107.58 and $111.65. Okay, so basically in this scenario, if we really get, and this will already get more likely if we see a break above 105.87. In this scenario then, should we enter the upper resistance area, we would need to see the entire pattern here that developed since October again from scratch. So it would basically need to produce another wave 1 down, a wave 2 to the upside, wave 3 to the downside, 4, 5, and so on. Yeah. So that's sort of what we see here right now at the moment. To be honest, the DXY has really only been ranging since January 2023. Really just a sideways range. Okay. So yeah, that's sort of what we're dealing with. Sideways range has so far failed to break down in an impulsive fashion. The setup is there, but with the latest push higher, the bears are getting challenged. And I think in this video, I shared with you the clear invalidation points and the alternative perspective that we definitely need to be prepared for, and that has become more likely. So if I was giving you probabilities, which I'm not doing because they are entirely subjective, but then I would tell you that the yellow count has become more likely, but I would at the moment still slightly lean towards the white count and just observe how the $105.87 level leads to a rejection or reaction. If there is no reaction at all, then we are likely going to head towards the upper resistance area, which I would then need to understand as a larger B wave, okay? And also in addition to that, what we can do, we can calculate an additional target in that we compare the length of waves A and C, and it would be this target range. Okay, so basically between $107.15 to $109.77. I will leave these levels on the chart. All these levels have the potential to create a reaction. So it might, we might not even go up much more aggressively. So it might just be, okay, a break above the initial resistance area, and then we might just extend the current correction a little higher before eventually this move to the downside occurs. So that's my update about the DXY. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out the Stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.